All right, well, stocks are up largely on the heels of GE's plan to spin off its finance arm, GE Capital, in an effort to become a more focused industrials company. So let's bring in our markets guest on this Friday. Kevin Kelly is the Chief Investment Officer of Recon Capital Partners. And Kevin, your reaction to what's going on with GE, it seems to be pushing up the Dow.
Yeah, this is exactly what should be happening in the marketplace right now with this low interest rate environment. There should be deals happening and people putting capital to work, especially in this low interest rate environment. And that's actually being shown where GE's focusing on their core business and getting out of the capital. And Blackstone actually coming in and using the low interest rates to add value to their investors.
Well, let's talk about that environment. I mean, GE CEO Jeffrey Immelt told CNBC that this was a good environment to make deals. You have a lot of liquidity, low interest rates. What do you say? I mean, talk to us more about what the space is looking like for M&A deals going forward.
I think the M&A deals going forward is actually going to start happening over in Europe. Europe's expanding, it's starting to grow, and now with the stronger dollar, corporations can actually start putting that capital to work overseas and get deals on the cheap. So we're going to start seeing a big flow, I think, overseas to let that happen. And there has been talks, GE's actually looked at acquisitions overseas, so now they're going to have deeper coffers to do that.
All right, now back to GE though. I mean, is this enough, this spinoff enough to please shareholders? Stock has been pretty dull in recent years, right?
It has been dull, and they have had exposure to energy, and now that's kind of going out of the way, and you're seeing actually today the stock is up 5%, it was up yesterday. So this is going to actually give them enough money in their coffers to start actually growing and expanding, and I think you're going to start seeing some more outperformance after they've gotten over their energy exposure.
All right, let's shift to earnings. I mean, we sort of had the unofficial start to earnings season on Wednesday with Alcoa reporting, but earnings forecasts overall for first quarter are looking pretty bleak. How do you feel?
Yeah, they're bleak mostly because of energy, right? If you go back, I mean, that's going to be the real drag on it. I mean, tech, healthcare, and consumer discretionary are all going to lead with the earnings, and especially those companies that are focused domestically here and don't have as much exposure overseas with the dollar. And so consumer discretionary in the first quarter performed very well, and it's never been a better time to be a consumer. Oil is down, they have more consumer discretionary income, and that's going to start flowing into U.S. corporations over here.
All right, any names in these sectors, consumer discretionary, that you like?
Yeah, Macy's actually has performed well. Home Depot, you can see they gave guidance. So consumers are actually spending that money on themselves, and so the middle class is starting to really treat themselves.
And do you think that's because of low gas prices or something else?
Yeah, it's due to low gas prices as well as the job market. As we know, the jobs have been doing really well for everybody. So you're starting to see consumer confidence really grow, and we think that story is going to continue throughout the end of the year.
Although, of course, we did get that bleak jobs report last week. What do you make of that?
Yeah, I mean, there's always going to be hiccups. Basically, the numbers smooth out if you look back over the 3 months. And we're already at a low number, 5.5%. I mean, how much better can we really get?
All right, it's almost at full employment.
Yeah, we're pretty much at full employment, and corporations now have the balance sheet and low interest rate. So they might start expanding because the market is at high multiples. We think they're going to start putting that back into R&D.
Got it. All right, Kevin Kelly, Chief Investment Officer at Recon Capital Partners. Thanks very much for coming in.
Thank you.
I'm Scott Gamm, and you're watching The Street.